Hello, everybody. Hello to the open. And what a day it is. It's one of those days that you remember as a trader and investor because it is wild. It is incredibly bearish here in the morning in terms of what's been happening in the world over the last 24 hours. And of course, some markets are down a lot, especially the Russian index. I mean, if anyone hasn't checked that MOEX right now, which is down over here where I'm sitting, let me just quickly go back to a clean screen here. By the way, Stephen Langley, thank you so much for becoming a member. Appreciate it, man. Take a look at that. Oh, that's a brutal selling there that's occurred. And if you take that as a percentage, we're going all the way down to 62% down from top to bottom, and obviously a huge drop off here. They had to stop short sellers from getting in on that market. So we come here at a point of critical levels. Of course, the S&P 500 testing that 4,100 at the moment, getting close to the 4,000, faster than even we expected. And the US 100, the Nasdaq coming into 13,000, the DAX coming into a key level. And what might happen here, and we're going to have to ask the community this, is we may have a really big turnaround in terms of a big rip, followed by obviously some further selling pressure. There's going to be a trap here in the open. It's very likely the market will go off in one direction and then snap to the other side. So what is everybody thinking about today? Matthew says, open streaming for once. Yeah, man, it's not that easy to do it here. Not that easy to do it. Thank you again to Stephen for becoming, it looks like a day trader. Thank you very much, man. So we'll come back on the screen here for a second. And I've got to say, yeah, it is certainly one of those stories. Let's break down some markets here. Let's talk about this NASDAQ to begin with. So we obviously have had a lot of bearish inklings in terms of what's been happening over the last couple of weeks. We get the rejections here. We get the further rejection. It's coming up. Every rip has been a sell. And even here, I think while the stats might say, of course, in these, let's call it, we'll just say the word wartime kind of areas where there's obviously invasions and things going on, that you buy the day of the invasion, or you buy this kind of concept. But I think there's more at play here. We've got a double-pronged attack, everyone. And that's not just one side, which is obviously what's going on with Russia and the Ukraine. It's the Fed. And, of course, what's going on with inflation as well. And I think we need to bring it back for a second and just remember one thing. Do you know that the Fed have not actually even done anything yet? They haven't done anything. Yes, they've pulled back a little bit of money from the system, but they've just said that they're going to do something. Now, we don't even know what that looks like, but I think when we go over to the US 2-year and US 10-year, this could be playing into the hand of the Fed's master plan, which we might be discussing because we've got a bit of time here ahead of the earnings, ahead of the session open, I mean. So US 100, we're down here in the big red box. Now, basically, as you'll know, if you use a volume profile or you just look at the market really, you'll notice there's a lot of level around here, this 13,000, 12.8 level. A lot of people have this as their first level of support after we shot through that 13.8, 14,000. And once we get past that, of course, what happens? We move on to what you would think is the next level. The participation was literally maybe only 10 hours long, but it got into this zone. So this is where many buyers and some dip purchasers may be looking at this morning and saying, you know what? I think there's value here. I think there's an opportunity for me to potentially day trade, for me potentially get into a market. Now, buying something like this is not easy and also very scary. And rightfully so, because it is not an easy market to trade. This is a very aggressive market to the downside. So let's now break down the 15-minute and see what's been happening in the last couple of hours. Now, this is where I think things get a little bit more interesting. You'll notice this volume profile adjusting to around this level being a very key area. And I think that's about correct. Let's breach this in. We'll bring in a resistance. And we've got around this 13,220 zone. We've got some candles here. Rejection candle, a rejection candle, a rejection candle, a rejection candle. So that is 4 rejection candles, if I'm counting correctly. I haven't slept much. Has anyone else been up for basically 24 hours or 30 hours straight? Any other traders out there been up for maybe working? I think I'm working on 3 hours sleep. So I might be crazy. But, you know, I do it for you guys because I am a little bit of a crazy trader. What can you do? Votran, $4.99. I bought call options for my SPY QQQ expiration in April 1st. Should I cut my losses or ride it out? Thanks. Ooh, well, it obviously depends on where your strike is at. I mean, today you've got one thing working in your favor, and that is a really high VIX. So a high VIX obviously means that the option is going to be worth a little bit more. Look, if it rips, you might want to consider scaling down your order. I mean, I always go with scaling as a concept. I can't tell you exactly what to do, but scaling would be something that you could do there. April's a while away. It depends on your strike as well. So I think that's a very big thing. But let's see if anyone else has been up all of the last 24 to 30 hours. Adrian says, thanks for staying up. Yep, no worries. We can do that. Adam says, not much sleep. Gary's been up for a while. And Chupa says, you sound wired, bro. Well, that's what happens when you drink a few coffees, man. So there's a few no sleep teams. Look, it's been a big day of opportunity. And obviously that means that sometimes you want to be around for this thing. So the US 100, let's just breach this level here. 13,220. Basically, if we breach past this, I'm going to ask the chat this. What is the logical conclusion that the chat or people might have in terms of if we do get above this structural level here, do we think that it could move up, and where do you think it might go? So think about just the concept of where a rally, if it is going to occur, because remember, people are incredibly bearish here in the morning, and rightfully so, but people are incredibly bearish. If the market's opening like this, people start selling into it, people open up a ton of puts, all of these types of things. What might the market want to initially do anyway? Is they might want to trap people into this concept of course, oh, maybe this is a glorious rally, a great zone. Isn't this fantastic? You should still be very, very happy about where you're at in the market. Let's see if anyone gets it in the chat. We'll find out here. No idea this market is crazy. Fair enough, yes. So the way I'm trying to go to it is basically something around that 13.4, 13.5. And Ulrich says here the exact thing that I'm thinking. He thinks kind of like me, does old Ulrich. 13.4, 13.5 max till we reach 12.8, 12.9, short the bounce. Yeah, so I think shorting the rip is probably the big key here. Let's say you think of this, well, it was looking like it was kind of setting up as a mad inverse head and shoulders, but that's been breached in the last couple of minutes. So let's just go with this distance and just think, okay, it's not very technical, but if we take that out, pushes around that 13.4, we think about the Nasdaq from the previous day, where did it close? 13.5. So this is really just a discussion of if we do see a rip rally, there's two ways to think about this. Do you want to be the dip buyer if we see it break through? I'm not sure if you do. But if it gets back up into this zone, and maybe this answers the other question, and then you have a shooting star, you have a rejection style engulf candle, would this be a zone of interest towards the further short? And I think if you see the right turnaround here, and this does occur, this is obviously chess. That's what you do in the open market. You're strategizing your concept for the day. And any good trader should probably have potentially 3 to 4 separated concepts, whether they're stocks, indices, sectors, whatever they are, to be trading. Okay. And if you are looking at this, that's the type of thing that I'm thinking about straight away. Obviously, there's the short side. It's going to be really hard to get in on that at this level. If you were there yesterday, good. If you're there right now, tougher, because it's already moved so far down. I think your risks here might not be to the downside straight away. It might actually be to the little bit of this rally followed by the short off. Let's see if Ulrich agrees with this. He's been pretty good. I'll say this. I know Ulrich's in the big NVIDIA short, and I know he's in the Tesla, and we'll get over to that in just a minute. But wow, the NVIDIA short and the Tesla shorts are coming in. And if people have been following our technical analysis and following these big key levels, it is brutal out there on these ones. Let's bring up the Webull screener. I feel like it's been a while. Actually, I'm not even sponsored by Webull. Let's bring up this random screener that we're going to use here. I don't know why I'm still using this, but I've had it here on this computer anyway for a while. And let's take a look at some of these big sell-offs. We've got Tesla hitting into 700 sub straight away. It was actually underneath in the pre-market just before. So that's 8.22% down to a 701. You've got Coinbase down to a 159, down 7.48%. Whatever this thing is, EPAM down 18%. NVIDIA, another heavy short that we've been discussing here, an incredible technical short moving into 207, That's getting closer towards the $200 market. And this is why we're talking about, is there going to be or some kind of dip, maybe buy, structural buy that comes through in the market early, because it makes some sense. Let's have a look. Let's scroll over to NVIDIA here. I'll read the chat in just a second, but let's just do it. Donnie says, luckily I got out and went 90% cash in the middle of Jan. Oh, you're a machine. I'm ready to get the fork out and buy some stuff. Well, that's pretty good. And I mean, these are the types of levels that you start to think, okay, well, maybe I do want to start, people say, what is it, DCS or something? Some kind of dollar. Well, I don't even know what that means. Is that like dollar cost averaging or dollar cost strategy? I actually don't know what the acronym means. Someone tell me in the chat. But here we've got dollar cost averaging is a really good concept if you like to take nibbles. It's technically what a big bank would do. What a big investment firm would do is they buy key levels on the way down because they're not able to necessarily pick these dips. They buy their key technical zones and then they want to get it through. Oh, it's just DCA is what they say. Oh, well, then dollar cost averaging is the term. So let's break the old NVIDIA trade down. Let's go and have a look at this. 207 in the pre, pretty brutal. We've been pretty much predicting this 200. If you don't know, do not ever ignore the tweezer. The tweezer is a very strong pattern play with the follow through. There it is. That's my favorite. And if you actually break this down to the small time frames, it gets pretty damn aggressive. So you've been helped along here, but I think it was inevitable that NVIDIA was going to try to test this 200. So when we think about it from a weekly perspective, where are we? We've got trend line, trend line, trend line, trend line, previous resistance, support, and support again. We're going to open around this structure. If you get a 5-minute or a 15-minute turnaround story here, there still could be a rip here in the morning. And while I believe there even could be further short side in this market, you still can't ignore how much gapping is occurring here on some of these stocks. So I think that's something that a lot of people probably aren't considering in these markets. What do you guys think about NVIDIA here at the 208 in the early morning? SW says, I don't see the market rebounding much in the next week or two. Fair enough. I see gap and crash. Well, yes, we're saying sell. The sell the rip kind of philosophy here is probably the most solid concept. If there are rips, they're going to be met by bearish demand immediately because that's what Wall Street is going to be looking towards. This is an ever-evolving situation. Obviously, there are still bits of information coming out. I don't really want to talk on the conflict itself too much because we're talking about the market. But let's just say as the kind of conflict gets more and more aggressive in certain areas, I'm sure that will start to shock the market more and more. Plus, we'll see all the world leaders come out and say things and this and that throughout the session, which will, of course, create volatility in these markets. So I think that's something we need to look at here. Tom, what are the purple and white bars on the side? This is the volume profile. And I must admit, I stole Ulrich's color scheme because I was like, you know what, I'll add that in. Green Thoughts. Green Thought says, Tom, I never asked this, but today I am scared. I am usually a calm swing trader. Not a good time to swing trade at the moment with the VIX above 20. Any idea on Amazon? I'm holding 3,500 June calls. Need 3,300 to break even. Should cut my losses. Oh, June. So a while away. 2,900 in the pre. I'll have a look at that in a second there, Green Thoughts, but that's a bit brutal. Midas says, Tom, what's the resistance for NVIDIA? Well, if NVIDIA does rip, I guess it's going to be kind of tough to see where you've got solid resistance. I'd be looking at the index more so than this, but if you're breaking it down somewhere not very high, I mean, you're literally just talking about it kind of having problems around here at the 216. I would use the index in many ways to play the market itself. So if you're thinking about where does all my rallies end, let's say you are analyzing the Nasdaq and you say, okay, I think this Nasdaq's turning around. And then you go and pick Tesla because you think Tesla is going to give you a greater gain in terms of being able to pick that up. Then as the Nasdaq hits the resistance, you would sell the Tesla position as well. They will work in unison. Remember, they're locked at the moment. All of the markets moving up and down in unison. It's not like one stock other than materials and gold and some of the things we've liked recently is going to move separately. Basically, Tesla's going to move heavily up, and if the Nasdaq starts turning, it'll move heavily down. So let's just have a look at Amazon, break down that one. All right, am I back? I have no idea whether I just lagged out completely or not. So this is a question about Amazon, whether it can get back up. So Amazon's closed back down to 2,800. The question is a 3,500 call, which is quite far away. It's got time. Look, these are the kinds of supports that, do you sell this level? Again, if you're all right, am I back? I don't even know. All right. No, I'm not. I shouldn't be muted. Should be back. My goodness, that's Australian internet at its best. Okay, well, it seems like we've picked up somehow we've picked this up. I don't even know how that happened, but basically, Amazon now. Someone says liquidated. Yeah, close enough. So here's Amazon down to support. If you're ever getting fearful of something, the best thing sometimes to do is to think, well, where am I at a technical level? So you're theoretically at a support for Amazon. There's a lot of structure over here. Obviously, it's going to be a big volume profile area. Now, if you're fearful here, then you've really got to come up with a strategy. Do I descale myself a portion off at this level and then let it bounce back up? And if it does bounce back up, then I descale myself again and then just try to get out at some lesser kind of level. Or do I just say, okay, look, let me cut half of it, absorb some of that loss, and then if it comes back, I'll ride the rest. That's really the only thing you can do. I mean, you're at support here. So the worst in terms of the movement overnight is probably going to try to find some kind of big zone or range here. Charles Gibby, $10. Thank you very much. Charles says, have a coffee. Not tonight. I won't, but thank you very much. I'll have one in the morning for sure, man. Yeah. Thank you very much, Charles. As always, appreciate it. Joseph NG says, hi, Tom. Typical. What's the Fed's response to war? The Fed, well, theoretically, I guess they've usually gone with, I don't really know. I haven't really looked at the 2-year and the bonds back then. I mean, obviously they went to different types of monetary strategy, but I guess they would have had inflation to a degree. So rate rise usually would have happened. Yeah. That being said, if you think about it, this is playing into, let's talk about the now and here. This is actually playing perfectly into one of the Fed's get out of jail strategies, which is to create instability in the markets, to effectively lessen the bubble. We talked about this in the private community, to effectively lessen the asset risk, which will go through housing and also, of course, where we are right now, which is in equities. And this will maybe lessen the demand for the Fed to raise rates. And I think that's why you're seeing this market as well starting to come back down. It's coming a little bit further down. And that should also be seen as a slight positive towards the markets if you're thinking about it from an investment longer term point of view. Obviously, we've got this shock reaction with Ukraine, but overall, the bigger longer term story is still going to be inflation, most likely here. Nape M says, hey, Tom, how do I pull up US 2-year, 10-year on TradingView? Yes, I was going to show everybody this and make a video about it. I guess I'll show you now. The code is basically you type in USO2Y and then you put a dash. So it's like this, USO2Y dash US10Y. So you would basically do it USO2Y dash US10Y. If you do it that way, that's where you'll get it. And this will give you, I like it this way around. You can obviously do the ratio either way. And that will show you when the yield curve inverts. And at this stage, we haven't seen yield curve inversion, but it will be something we need to do here. So yeah, pretty important to be looking at that. We've got a lot of questions coming in here. Should you buy at the open or the close? Well, obviously, we've got a lot of fear here in terms of the open. The close is going to show you the direction. And the key is usually the first 1 to 1.5 hours to get a bit of direction. The market, how many times has this happened to yourself? Ask this question always. How many times have you seen the market go off in one direction, then reverse, and then go back in the other direction, and that to be the sustained trend for the day? It's called the fake out, and it's a strategy that if you know how to spot it, you can actually spot when the market's trapping retail or trapping, I guess, beginner traders and investors into a certain direction for the start of the session, and then they move it in the other one. And if you're able to spot that, it's a really good strategy to be able to trade the opens into the right direction. Generally, the close is the key. However, we're not in normal times. So the problem with the close is the key is what the market's doing at the moment is it's moving more in the futures. So we're like today, we obviously have the close down. And then it just, well, because of the news, it just completely capitulated all the way through. So the futures are doing a lot of work at the moment, and then the stock market is playing catch up. I think that's one of the big problems that you are having here with the close. The close may not be the best when you're talking about some of these fast, nimble reactions. You've really got to be there for the trading volume at these times. It's part of the reason why I'm up, because yesterday was an exceptional day, and that was mostly due to the DAX. If you came in and had a look at the DAX, again, you've been following the channel. We talked about this. We'll use a different DAX, which is capital.com one. This was the real tell that markets were at a critical point. When you have 1, 2, 3, 4, 5, plus you believe it's a Wyckoff distribution, and you have the key support here, and you're testing that from the bottom up, this is one of those days that's very stellar. But then you could make a case for today also being a very big point of interest. Previous resistance, 2020 highs. Okay. Structure. So a lot of structure through here, big issues and problems. Underneath the 14,000, around that 13.8. And you can already see a little bounce here in the DAX. So this is why, the market here on the open is probably the opportune time to be looking for structure. But making the guess and being reactionary to the market structure and it showing you the way is the difference often between, success and just saying randomly kind of throwing a dartboard at the markets. You don't want to throw dartboards at the market as much. And if you do like buying in the mornings and you go, okay, I like my zone, and you draw up an area and say, that's my buy zone, maybe that's where you should scale in. You buy a third. If the structure then agrees with you, you add your 2/3 of your position, or you add another third, and then you add another third. And that's also a great strategy for the open session, scaling into your orders. Vikash Singh says, any hope of today being green? Fully green, I doubt it. Some kind of rally, I don't doubt it. Gary Sony says, if the yield curve inverts, I think we may get a recession this year with 3,200 being the target. Yeah, yield curve inversion would be a pretty big disaster. So yeah, you don't really want to be doing that. If we get a yield curve inversion, it's often the canary in the coal mine. So it's way earlier than a crash itself, but it pretty much tells you that the market is saying this stock market is in dire, or the economic kind of crisis is real, and it's in dire need of some help. And in most stages, that canary has busted the market within 1 to 2 years after that. Well, in fact, it always has. And it's been very, very aggressive. That's been full recession, full pullbacks. You don't want the inversion. If that happens, we're talking a totally different scenario. At the moment, we're still relatively positive. So let's talk about all the trades that have been doing well over the last 24 hours. So obviously there's the big one, which is wheat. Wheat has been fairly decent here on the trade. Ukraine, big exporter here, big trade there. That's probably left in terms of it's on now. That trade has been successful as much as it's going to be. Maybe it'll go a little bit higher, but that's certainly a very good breakout. And that's, again, a good structural play here. Nice support, resistance breakout, not bad. One of the ones that we mentioned on the channel, I'm not sure if anyone has this. Anyone got palladium or gold at the moment? Let us know in the chat if you have palladium or gold on the long. Palladium moving up as much as 9% on the day. Strong breakout here that we saw in the previous session. Of course, this escalation has pushed that through. So there could be further movement in these trades regardless, just as this situation unfolds. I mean, things like these precious metals are already meant to be doing well due to the inflation concerns. So now with this second kind of, I guess you would say, aggressive big bull on them, if you're looking for the longer term, I mean, there's a real case to be made here for something like palladium getting back to the $3,000 over the next coming weeks. Big movement, though. I'm sure some people will be scaling down just due to it hitting around that 2,700 resistance. So previous support, previous resistance, fantastic trade. Let's see if anyone has this one. Mike's got silver, a good pickup because it was lagging behind gold. Silver and gold from JR. Freddie KGB says, I've got yes, both long. William, gold. And Chupa says, should have bought more. Yeah, well, that would have been nice. By the way, thank you very much to the 760 people joining us. If you can, to help us out, please do smash that like button if you enjoy our streams, because it will help us. We're not used to doing the opens at the moment. So to get those numbers up, definitely consider smashing it if you can. Now, palladium, well, that was a trade that did happen. Gold, obviously, 1970, 1960 reached. You get a closure here, and the key is probably a closure above. Gold's already going ballistic, but as you know, gold can go very ballistic very quickly. This is the type of move. This is the type of move that then moves towards, all-time highs. So while gold may consolidate, if we see a de-escalation here, it's still showing us signs of it's back in the play. And because of the economic uncertainty as well, I think this is going to be continuing to be a good play. So anyone that's in gold, congrats. This is a good next level. The level after this, I don't think it's even 2000 necessarily. I think it's moving towards new all-time highs. That's kind of how I'm feeling bullish on it. And for other people that have been trading the miners as well, GDX is going to be a good day here. 4% up on GDX, so that's the gold miners. And that's breaking through the downward trend on the sector. So very nice. Mitchell Miller, man, you're a big supporter here of the channel. Thank you very much. Let's give some claps to Mitchell Miller. $50. Appreciate it, man. All things considered, I hope you ended up getting some puts in yesterday. All things considered, it's great hearing your voice again in the morning. No worries. Back to yesterday's question on shorting the market on the rips. What's the best approach for scaling in? Okay, well, let's go over to the scenario of the Nasdaq. And we don't know it's going to happen, but if it does, I think these are interesting zones. So we know where the gap is. The gap fills around that 13.4, 13.5 area. So the best thing to do, and we'll use probably yesterday's example as a scenario, is to watch for your key area, which in this case is here. And if you have this kind of structural movement, you often watch for it to show kind of breaches through in the open. So what I like to do is if I see some big wick or wick rejections, this was more so around the DAX and the S&P, is I like to find it on the S&P if possible. And then I'll come back over and I will trade that level. Now, you know I like lightning bolts. So let's go over here to the scenario today and consider the market coming up. Let's say the market goes back up here. All right. And then you see it hit this level and then it does this on the smaller time frames. The peak, the trough, the lower peak, and the lower trough. This is where you would sequence basically start selling those positions. Now, ideally, this is also some form of Fibonacci in terms of a Fibonacci pullback. You want that to be overlaid with it. So if you took a run from here to here, let's do that now. Fib pullback. Does that fit into our thesis? Yes, it's between that 38.2 and the 50. This is a very good level for those types of occur. So you've got one, which is the lightning bolt turnaround. And if you see that, you can basically scale into your position. If you get up and then you get like a rejection candle like this, like a big shooting star or something, I like to have the follow through. So what I do is I grab some on the follow through and then I scroll down onto the smaller time frames and again, look for the lightning bolt and then scale again. So here I might take half a position. And when we get the full sequence, I'll take half a position. Other things that can occur, double tops. You can get a whole bunch of different structural moves in this area. But create the zone first, Mitchell. Once you've got the zone, then you move towards really analyzing the market foundation in that. And some people just can't handle not being in the short. So they might take it straight away in the zone, 1/3 short, 2/3 on confirmation. That can help your psychology. Think about the type of trader you are, and that should help you in this session. So we're about an hour and 10 minutes away from the open. The volatility is still here. We've got 3.25% down on the NAS. That's dropping. Well, how many points is this actually over? We've dropped from 14,000 to basically 13,000. So it's 1,000 points in less than 24 hours. It's a pretty big movement there. It does make sense for some kind of relief, even though most people aren't going to see it. It makes sense, but don't predict that that's going to happen unless you see the structural turnaround. So look for the structural turnaround in the morning. And if you get that type of thing, then you can say, okay, maybe I take the rip. And if you don't want to take the rip, which is totally fine, then if it does rip, look for your structural short. Probably the safer trade is actually looking for the short opportunity. So hopefully that does help you out there. Thank you very much for the donation. What would you consider signs you missed that this was coming? So, okay, yeah, I think that's a good point. Signs that we missed that the full sell-off was coming. Depends where you mean. So I don't think we missed the sign that the market was weakening, especially through the S&P 500. And I think this last move, especially the move from the dead cat bounce, was very easy to see. Okay, so let's go back. It's a great question. Let's actually look at this so people can find it in the future. Definitely pay attention to this one. It's worthwhile. So this first sign, I probably didn't get into it enough. I was rotated to the sectors that are correct, being materials, energy, gold. You would know if you've been watching the channel. I've been crapping on about gold. I've been crapping on about materials. I've been crapping on about energy over this period. Okay. Over this period, the market price action was already telling me to get in those areas. What there is a problem that I think happened here, and I think when you look back on it, it becomes very easy to see. But this point here became incredibly easy towards the short side, and specifically in the last 24 hours to 48 hours, it became more apparent that we were going down, and that was a mixture of this little double top that occurred, the role reversal that occurred, but more importantly, the weekly tweezers. I mean, when you get this type, you cannot ignore it. That is a serious candle formation. And when you bring in the industrial sector, which we've done, the DAX Wyckoff, the crazy ABC leg of the IWM, all of this move, I think, was much easier to find than any of the other moves before it. Okay, that was very easy to pick. The move over here was probably a mixture of how does growth react to interest rate hikes initially? So that's certainly one that I think probably could have been picked up on better. And then also maybe the politicians selling all of their positions. That was certainly huge. And then just really diving into that seasonal weakness of tech, and tech being such a huge portion that when you think about a Jan, Feb seasonal weakness, which you always technically have, all right, this is a very common time for technical weakness in those particular tech stocks. They're a huge portion. They don't like initially rate rises, and depending on how big rate rises become, they can do very poorly. So we've got rate problems, and then of course you've got all the politicians saying, "Oh, we won't trade anymore. Don't worry, we're not going to trade. We're just going to sell the absolute high of the markets." Fantastic. So I think there's some of the good signs, and yeah, it's a good question. And look, if you could go back and have a time machine, would I do better? Sure. But I'm also of the opinion that it became, look, how much did you really miss out on? Let's say you were buying the dip in this structure, the trade structure. If you've been following us for the last couple of weeks, this area here, and predominantly this area here, I think we've been fairly correct. And the sector picks have not been that bad. I mean, Jets obviously is going to take a big belting off this, but in comparison to the rest of the market, it's still held up way better. And we haven't been buying tech for quite some time from a sector bias. So that's pretty important. Gary says, Tom, the Nasdaq is on the monthly candle on the 20. Let's see how it closes Monday. Yeah, I think, look, that's important. But again, the moving averages, the monthly 20, you have to go back through and say, well, has that been a respected moving average? And I would say it was inconclusive. I mean, usually it kind of it went through that. Over here, it was more about the weekly 50s that were sitting there as well, because it tends to be pretty similar to it. So I think it's an important level, but it's not the be all and end all. And I wouldn't put as much confidence in that as a trade. So again, let's have a look around the broad market. We need to bring up the pre-market stuff. Let's have a look here at what actually is still getting hit the hardest. So Tesla now 699. So it's going to open probably around this 700. This is the problem I have with the market, and why I feel like there could be some buyers. I believe a lot of retail traders are going to see 700 and be excited for Tesla. And they're going to be excited for things like NVIDIA and stuff. Whether that's right or wrong, probably wrong, they're going to like these levels. I mean, if you see a $700 target on Tesla and you were expecting that the whole time, people are going to probably look at that and go, oh, yeah, that's a tasty level. And then you'll have a few others that are coming in. Obviously, we talked about the NVIDIA as well. And there's other stocks that are down. But let's just look at some of these numbers. So Twilio down 8% basically. Snowflake, another hyper growth. Still holding up very well considering 237 down 6. Baidu, some of the Chinese stocks down a lot. Airbnb dropping here 7%, almost in the pre. Is there anything even green? I think there's a few big green stocks here. Chevron, energy, and Lockheed Martin. Yeah, that's always a bit of a defensive play. Let's actually have a look at LMT on the charts. We've got some time here heading into the market. So let's have a look at Lockheed, because this is one of those plays that often does do a lot better. And you'll notice the rotation's been going in there for a little while. So while the market's been sneaky, if you think about it, when did this rotation start to occur? Back in December, they were picking this stock up, and it's held very well. So remember, always in the market will show you signs that it's getting ready to do something, because you will see it in the sector rotation. And if anyone's ever interested in doing it, I would suggest you do the private mentoring stuff with me, because I go heavy into this. And anyone that's done the private mentoring, let the people know, because this understanding is the next level of game playing in the market. And what you'll notice is this has a beautiful buy, by the way. I didn't get this one, but it's just another big rotation. We're at resistance. And of course, it makes sense that this is starting to trigger, because it's got to do with the exact problem that we have right now. The market was picking this up back in December and starting to buy it through. And it's held all the way through all of this up-down market. It's just sat there chilling, getting ready, coiling up for a potential break. And it's obviously a huge zone for it that it's getting through on the morning. So this is another one of those stocks along with those materials here. Nasdaq down to 13,042 now. Rami says, I quit. What are you quitting, man? Trading, or are you just quitting in general? Fair enough. And if you do quit, probably one of the better things you can do is just go to index trading or index investing. Andreas Johnson says, Tom, should investors be worried or shorting about a shortening of the bull market? Yes, if that was true. Or can we come back in a month and see some green? So I think we can come back in terms of a recovery, but then you ask the question of, is this going to be a V-shaped recovery, or is it going to be more of a U? And if we think about the season axe, where's our season axe? Even here, oops, I got rid of the palladium thing. Even here, when rate hikes have come through, yes, we have had the next 12 months be positive, but look at these averages. We got a midterm election year. We've got this word here happening, and we've got rates as well. That doesn't lend itself to a great time. I mean, think about 2015, think about 2004, think about every other time. It's been up, and statistically it's up, but it's not heavily up. So if we go back to the S&P 500, I think a lot of people are going to be expecting the market to just be like roses and go all the way back up and everything's fantastic. And, we're back at, all-time kind of highs and all that other stuff. I think what we're seeing here with the Goldman Sachs revaluation for the S&P 500 for the end of the year and things is that they kind of expect more like this. Maybe it picks up, drops, hits something like this, and then later on the year dips again and then moves up. So it's not going to be a full V shape. It's going to be more of a U shape, or a slower movement. What does the chat think, though? Let's find out. Midas Touch says, Tom's mentorship is a game changer. Thanks, man. Appreciate that. It definitely gets you. You can pretty much see, Midas, that when you think about these markets differently, you won't necessarily get stuck as much. Even if you are technically wrong about the top peak, you'll be rotated into the right stuff, which is kind of cool. More of a W shape. That's right, Brett C. Have you been thinking this is bullish? Fed stop raising rates. It falls into the right plan. The Fed doesn't have much choices. If you can get hold of the Credit Suisse article that I think a very big brain guy wrote, he basically argued the only two ways out for the Fed here are either volatility, which is what we're seeing in the current market, or the other way out of the market is obviously a US recession, and they raise all the rates. So what this volatility is actually doing is it's bringing down the expectation of the 2-year, bringing down the expectation of the 10-year. Fantastic. That's actually good for the longer term health and potential here of this market turning around. This volatility, while it seems insanely bad, could actually end up helping the Fed out of their tough situation. No worries, Midas. Appreciate that, man. Hot Potato Trade says, I'm not so optimistic if inflation does not gain traction. Fair enough. And then Daniel Summers says, can't believe Tesla was 1,200 not so long ago and Nvidia 340. Yeah, but I think a lot of people maybe just first time in Tesla. I mean, Tesla bulls have copped some serious hidings. I mean, think about over here as a percentage. It was a 190 and it went down to 70. That's still a big, brutal sell off. So we've got here a percentage sell off of 64%. And it has had some pretty brutal sell offs in the past. I remember this one over here. This was, now what, I think, was it this sell off or the other one? When it was recouping, that's when Elon went and smoked the marijuana on the Rogan podcast and stuff. That was another 53% pullback, all these types of things. So 1,200 to 700 as a raw percentage so far is about 38. So technically Tesla traders have copped it a lot worse than this in the past. And they've had people that have held the stock through all of that time have had the true diamond hands. What I wonder is that person that retired on it, because he would have been all happy about it, but he was never going to sell any shares. Admittedly, he's got a lot, but geez, the hiding he's taken in his portfolio recently would be absolutely severe. Wasn't it like 11 or 12 million, 13 million? So that would have been dropping all the way back down. 700, an interesting zone. Every $100 is important for Tesla. But if we get to that 3,800 S&P, I think Tesla will probably be sitting around 550, which is hopefully the worst case scenario we have here. I mean, that will put us down to around 56% decline. Previous supports met in May of last year. So we do need to remember March and May of last year. That's all you're going back to. We'll give some crypto thoughts in a minute. So we're 1 hour off the open here. Everything is still down. The markets are still, really haywire. We'll go through some requests in terms of stocks. The gold trade we've already done. That's hit the big 1960 res and it's just going to float around here. Let's take a look at silver. Silver breaking out. Nice trade there as well for the session. This is playing catch up. So remember, gold is getting close to $2,000 an ounce. Silver's nowhere near 28.35. So silver's behind heavily in the metal game here. And I'm not sure, but usually silver likes to lead. It's a bit weird that it's been so far behind. So it's a nice breakout here for today. Big breach of this 25-30 area would be nice for it as well. And that should lead it into these better levels. Susa, we haven't looked at Apple yet. We certainly will be, because Apple is one of those telltale signs of support resistance, and it's starting to turn around. US oil ended up bouncing up. Now, I guess I've talked about it being on the bearish side for a little bit here from a technical perspective. Look, this news did push it through. Some of you are going to be saying, that's right, Tom. I told you, man. I told you. I still think that oil from a technical side was a risky trade in here. And I know it's up 8%. You might say, well, that's better percentage than some other things. But this was still a very risky trade. It can go either way because it was looking technically bearish. But of course, this information has pushed it through. So my preference always is to go with the trade that looks technically bullish and has the information also coming through for it, which is the gold, the palladium, the wheat, those kind of ones. They're just the better trades, I feel, from a risk-reward standpoint. This is still an incredibly risky trade each way in terms of what's going on here. It's an interesting one, Jason. I see what you say here. He says central banks have got a bit of conspiracy. I'm not even sure if I totally disagree with you, which is pretty conspiracist in itself. He says central banks are behind every modern conflict. It's like basically going back into that thesis that we had before, that this kind of works towards the Fed doing quite well. Eli Poloski says Facebook hit his target of 190. Yeah. All right, let's move over to Apple. Let's talk about Apple here. 153 on the tape coming in. We've got the resistance and the supports at this level. So Apple's going to open either on the daily 200 or very close to this support level. And again, it opens up that capability of having an early rally here to try to fill the gap. Another one that you might be looking at to fill that gap if it can, and then to look for the selling of the rip. I mean, I'm going to put a poll in here right now. Let me see if I can get the poll up. I probably can't, but because I crashed before. Oh yeah, I think I can. Okay, let's get a poll going. I'm interested. Need to get the poll. I don't know why I can't change anything from add. Oh, I can. Okay, 1 second. Here we go. All right, here we go. Vote on the poll. Let's find out. We've got a new member, Will B. Nee, upgraded membership to the Day Trader. Thank you very much, Will B. Appreciate that. Make sure you sync your subscription with the Discord. We'll be coming out with a whole bunch. I'll probably do a special live stream for the private community tomorrow as well. And we've got a donation coming in from Pradeep C19, SGD $10. Where is the burr? What is that? Is that like cash? As in like the Fed making the burr? I don't know where the burr is. It's gone. It's gone. DP says all wars are covers for financial problems. Well, yes. I mean, the COVID stuff wasn't probably very good to Russia's economy. Harry Rides, thank you very much, by the way, Pradeep. Appreciate the support there. Harry Ride says, I bought Tesla at its peak and also US 100. I've lost 10K this week. Life's great. Hang in there, man. That's unfortunate, Harry. It does happen to us all. I've been belted quite a few times in markets. And what you'll unfortunately learn is that, well, it's one thing to probably start to think about a bit more of technical analysis, but also if you're trading, remember, a trader will have an entry, a stop loss, and a take profit. An investor tends to have an entry and a time frame. Okay, so I think that's really important, or a thesis as well. This is an important delineation. If you're buying, and trading, you really shouldn't be taking massive losses. You should take the loss that you have specified with your stop loss, etc. Fentelex says, Tom, what's your opinion on PayPal? Not looking good, is it? I was holding very good yesterday. Today isn't too bad as well. Keep it up. Cheers. So let's take a look at PayPal. We'll bring it down to this market here. And PayPal is trading around 95. So around that 195 area. It's down 5%. Could be worse. I get what you're saying. I think the thing with PayPal is, can you look at it from a flag length standpoint? So let's say we go with this being the full length here. And I think you should take it from the break in terms of flags. This ends up happening. I feel like it's getting close to that technical bottom. Even if you took the full distance here and you said, okay, let's go that from the extrapolation out, that's still pointing towards this being the level that the market was targeting. It makes sense, $100. The market's so volatile, it's moving around. But this is where you kind of feel like the structure is going to form. This is a famous one that Kramer also, I think he was going, I don't know, but I believe he's apologized about it. He went mental about it being the best investment ever. Is that correct? I think it is. And he went psycho, and supposedly he really pushed it. and it hasn't been, unfortunately. I mean, look, I was trying to trade it up here. I'm not going to say I wasn't. I remember it here, right here. So here, I remember it, and around here as well. But again, trades have an entry, a stop loss, and a take profit. The key is, and I was even considering it here actually, but I said, fool me once, shame on me. Fool me twice. Oh, wait, fool me once, whatever it is. Lots of shame. I forgot the saying. But the point is that I wasn't going back for more because the price action was showing that it had a bit of false breakouts. Before, it had been quite good. So yeah, trades have entries, stop losses, and take profits, but Kramer went ballistic about it being some kind of investment. I think he had to apologize. I think it's a level of structure. However, we haven't seen any structure. So you're really just saying, does the technical make sense that this is where it wanted to go? Sure. Paul gets it. Shame on you, shame on me. That's the one. Really? Is this true? Now that would be really bad. I didn't think that was going to happen so fast. That one will be the spanner. That'll be the X factor if that ends up happening. No watermark? Yeah, we'll get that back on. There you go. PayPal. So market's down 3% here. Small recovery in the last couple of minutes. Let's go into the structure of the US 500 on the futures. I mean, that's really all we can do here coming into the market. We know the NAS is on a support level. We know the DAX is on a support level. We know the US 500 is right around that level of support. It's tested the low again, just above 4,100, heading into the market open. We've got the 4,160, and previous close was what, around here. So basically, if we're going to get the gap fill, you're expecting the market to show some signs of recovery here. Let's even go smaller. Let's go to a 1 minute chart, get crazy with it. We have a bit of a downtrend that's come through here. Consistent downtrend. No, not really consistent. This is the problem with trend lines. You tend to curve fit them a lot. So you curve fit them with what your narrative is, which is a bit of an issue. So there are some situations here where we've got a series of at least lower highs. So it's been lower high, lower high, lower high. Each rally has been met by selling pressure. All of a sudden, we're starting to get through that. Remember, this is the last little lower high over here, and then you've got one here. So these could be signs of smaller recoveries coming through. And the bigger sign of obviously the market feeling healthier is through that 4160. So go over to the US 100. Whoa, that's a lot of red. That's going to be around that 13,222. So there you go. That's important, Paul. Exactly. Truly says Tom is back on early streams. Market crash. Good on you. Yeah, I'm doing today. We won't be doing the close, though. I can't do both. Not again. I've been up for about 30 hours, so I'm not going to do both. Siri says, loving the live video. Keep me sane. Yeah, look, we do want to be just thinking about this logically, going back down to what are the most logical conclusions. I believe that we have discussed them. Let's bring on the discussion in the Discord community. So if Discord community members are watching this right now, all right, in the index room, I want this, the public index room, post your concepts right now, and we'll watch it live on stream. Anyone that's not in the Discord community as well, come on side. Okay, you got to come in. You got to come in. Come on, get involved. I'm going to post the link. At least get involved in the public one. So if you're listening, send through some images here. You've got a couple of seconds, maybe a minute or two, and I'll bring them up into the stream. So I like this idea of the potential of the base formation. Actually, the NAS might have a better downward trend here on the futures market that's trying to beat itself out. So we've got here like little, you can kind of see it, yeah? Just the narrative of the lower highs kind of slowly being broken through. Matthew K, $5. Thanks, Tom, for streaming this morning. No worries. I know a lot of people are freaking out. We need to bring sanity to an insane situation. And I, again, am not saying that I think this is necessarily the biggest low in the markets. Do you want me to go through? Do you guys want me to go through the thesis towards further shorts coming back into the market, or do you want us to go through more stocks? I'll get the current feeling as well on the market today. So, I mean, this is an interesting one. Bearish sentiment today, 74% from you. 74% bearish, 26% bullish. Now, that's a heavy sentiment towards the bear side. 75% now. So most people are bearish. 363 votes, and it's a heavy bearish day. Derek 4 with 1,000,000 zeros 4. Welcome back, sir. HK $50. Thank you very much, man. I've missed these pre-market streams, Tom. Yeah, I'm sure many of you have. Look, it's good to be here for the pre-market. It's always a bit exciting. The close is the best time for often trading with the swing, but let's face it, the swing is not good when the VIX is above 20, so that kind of creates a little bit of problems. Let's bring on the Discord community, see what they've got for us. Let's see what action we've got here. Okay, so we've got Gary going in with, he's going with the full action, kind of 3,800 full rejection here. So he's obviously using the real market, considering here that the weakness will go into this zone, and then he's looking for a full-on buy, basically trying to scale through this whole green. So he's looking for a 4,000 kind of initial entry, and then to scale all the way down to a 3,800. It's an interesting concept. So yeah, I mean, I can't deny that 3,800 might be coming up in a few seconds. What's this? Oh my goodness, that's the thing. And then Hot Potato Trader has a image here where he's got a fib of the full run. So basically a fib of the full move, 38.2 fib. Good level, that one, the old 38.2 fib, 3,800. So that's exactly where you expect, if we do pull back, this to be met by strong demand. This is where technical bear market. Remember, the distance from the peak to this area down here is going to be around 20%. And that's where you enter technical bear markets. The actual Nasdaq is entering a technical bear right now, which is incredibly interesting. So the technical bear is being entered into that point. Thank you very much, Derek. Appreciate that. All right, let's do the Tony Price brings up a great point before we go into the thesis. Tony Price says, I will never use margin. Yeah, look, it's a tough lesson to learn. I know what you're saying there, Tony. I've seen people blow millions, and it's rough, man, and it's bad. And margin is almost the worst enemy of, I would say, predominantly guy traders, like men. I don't know what it is. I've trained a few people over the years, and I find that women stick to the plan, and guys, sometimes there's a night, crazy things happen. I don't know if there's a bit of the coca that comes out. I don't know what goes on, but all of a sudden it's bam. You know, we're going in hard, and by the morning you're sitting there, you got red eyes, you don't know what just happened. You were trading the futures and E-mini. You might have got into some weak contracts. Bad things happen with margin. So I think with margin, always consider this. How much do they lend against a house? If a market drops 30%, if you're leveraged 3 times, are you almost bust? The answer is yes. You are very close to bust. Remember, 33% will blow your account backwards. So you'll be very careful with leverage in the market. If you take leverage, you've got to take it with an entry, a stop loss, and a take profit. But also, if you take leverage, can you afford that risk? It's the YOLO lifestyle. People want to be rich straight away. And in some ways, you could see this whole correction in the market here, or big pullback, as a way of saying, you know what, you thought you couldn't work anymore. You thought that you weren't allowed to, like, you were going to make millions of dollars trading NFTs and crypto and stocks. And you were saying, I'm going to retire by 28 to 36. It's just so easy. Everyone else is doing it. Why can't I? And they're like, wait. People don't want to work. Their productivity is low. We want people to stay in the system till you're 70. Take their money away. And that's almost what this is. It's almost a flush of the system. I always go back to the idea of, do they teach education at school that is anything around saving money, compounding money, making money, investing? Is there any of that in your school? Answer this. I don't know. In Europe, maybe there is. In Australia, I would say it is completely useless. Useless. We learn nothing about how to actually live life correctly in terms of being able to get ahead and out of the normal kind of problem zones. Let's just have a quick look at this weekly, the 4 hour here. Look at that rejection coming in early. And get rid of all this crap for a minute. Look at this. Rejection wick. Ooh, okay there. Little sneaky buyers coming back in. The long leg doji on the 4 hour futures. The rejection wick. 1 hour, 7 minutes till that ends up. We've got 40 minutes here. We'll go through the thesis towards the short still, even though the long is the concept here. Let's see if anyone's ever learned anything in school about this stuff. Pedro says, nope. Vabe says, definitely not in the US. PK Subban says, no, US schools don't teach personal finance. No. They teach only one thing. How to be materialistic. And can you spend money? You need a great car, okay? You need the fanciest things. You've got to make sure you spend money. No money concept taught in the US schools. Harry Ride says, Tom, you just described my exact situation. We all make the same mistakes, unfortunately, sir. It does happen. Andrea says, Tom, I haven't learned anything about until I started an MBA, not even in my bachelor's. There you go. More from Discord. They're posting all sorts of things. We'll check out the Discord in a minute. All right. So let's just quickly talk about the thesis towards the short side, even if we get rip rallies. Now, we've done it in the video, but for anyone that's a first-time viewer, let's go through some of these concepts right now. We will start with Exhibit 1, okay, being the industrial sector. Now, the industrial sector actually has breached to the low here, and it's already started shorting off quite a lot. But this has some symptoms of, potential Wyckoff style, obviously, distribution into weakness. Now, you don't just form this quickly. It takes some time. So the market has been predetermining that it wants to do this. And really the signals were here. That's why I brought it up. And you might say, but Tom, you should have been here shorting it. Well, it's tough to see it there. But when it comes here, it becomes a more clean kind of trade. And that's why the last couple of days have been pretty big. Big rejections, obviously sell off. So thesis 1 is that is this doesn't look too good. Then we look at the US 30. So we actually bring up the Dow. Here's where things get really weird. It's the exact same thing. We're basically seeing a very strong weakness of huge levels of support. Again, the Dow, the rally into that and the dump kind of makes sense from some perspectives here. To go test this level wouldn't be too bad, and then to dump it back off. But this is a full-on distribution. And it's underneath these supports. So it again points towards the potential here for the Dow to weaken into 3,000. Now, if we're going to weaken into 3,000 on the Dow, what's probably going to happen to the S&P 500 at that point? What levels may we be reaching? Let's see what the chat thinks about that. So if we're weakening back into the 2020 highs, before the pandemic, this kind of 30,000 level, resistance, support kind of makes sense. If we take the channel distance, that's where it will end up being. What would that equal for an S&P 500? Let us know right now. Even in Asia, they don't teach anything to do with making and collecting and stuff. I swear if they taught things, it would certainly not work into the idea of people needing to work for money. Paul says you learn stuff in the School of Hard Knocks. That is correct. Futures are rising. Correct. All right. So a few people say here 3,800. So yeah, that kind of makes sense. We get that kind of rejection down to this level. The S&P 500 would make sense down to 3,800. Now we mentioned that before because there are a few reasons. Again, we've broken through the mega trend lines. We've done that already. We tested it. We've breached it here. We've breached it again, and we're getting this sell off. And regardless of what's going on here in the world, this is kind of the thesis that you can put in here. We've got the head, left shoulder, the head, the right shoulder. Now, if you believe in that head and shoulders pattern, because it is fairly decent, it's not too bad, then if you take the head to the distance, then you extrapolate that out, it points towards that 3,800. That also is where you enter a technical bear market. 20% is very uncommon. In fact, 15% is the average correction rate. I got this now, where did I put it? I don't know if I have it here. There it is. So this is the historical S&P 500 corrections shared in the Discord room. And basically here it has all of the average corrections. And you'll say average corrections, excluding recessions, negative 15.4%. So if you know where the average is, and you know that most of the time it doesn't get over 20%, you've got to kind of point yourself towards that. And you might say, but this time is different, but every time's a little bit different. So if you're in a recession, it's 36% average. Probably will be much more brutal than that if we end up going into a recession. It's probably going to be in the vicinity of 40 to 60% if that is what ends up happening. But let's say the Fed can maintain and kind of consolidate this market a little bit here. This is the average. Around 20 and 15 is all we expect. So it again fits into the thesis of the Dow hitting a support, the S&P 500 hitting a support, and all markets should hit a support at a very similar time. And because we're seeing so much distribution going on, and remember, we haven't even put the stupid IWM into the charts yet. The IWM's in an ABC pattern. So we have here the first move down, okay, brutal. The second move down, brutal. The third move down, very brutal. The same or very similar kind of distance pickups here. So if we grab the distance of the pickup, so the swing here has been very similar that way to that way. So this is like the third move down, and that gets us back to, again, 2018, 2020 highs. So all these markets are kind of syncing together with this very bearish scenario that even if rallies do happen, it's hard to ignore these technicals. I'm not even saying I don't know. We're not soothsayers of knowing exactly what's going to happen. But these technicals all kind of point towards a story. Now, you could say, but Tom, you're creating a negative bias concept. I'm still bullish on the markets. A lot of people are bearish through to the hole and they think it's all going to hell. Fair enough. I'm still bullish at these levels. And I'm even bullish where we're opening now from a potential first touch kind of, okay, let's start to accumulate a little bit of position here. And that's what bigger funds, I believe, are going to do. But I think selling the rallies here still makes sense because of this bearish scenario. What do you guys think? Give us some comments. Let's find out. We've got about 31 minutes till the market opens. We're sitting at a bit of recovery here. US 100 now up to 2.9% down instead of what it was before, which is a little bit better. Gordon Poljak, SEC $100. Thank you very much, sir. Says, hate the conflict. Yes. And look, I guess I should make it clear. I'm very sorry for the people in Ukraine. And I think that it's incredibly sad what I'm sure is going to be happening to many of them. The fear, the conflict, all of this stuff. We talk about this almost emotionless in some ways because, of course, we are trading the markets. But we do need to remember that there's two ways to look at this. We like the action in the markets, but this is a very real situation. So I think that I sometimes look a bit callously on the markets because I'm more about this monetary system. But yeah, it's very terrible. And my heart does go out to those people. I'm sure many people out there will agree with that. Hate the conflict, but love the FUD. Yep. Thank you, Tom, for the EU time friendly stream. No worries, man. Much love to all and good luck. Yeah, good luck, everybody. Good luck to everyone out there. So let's see what people thought about this. Gary Sony says, yes, we are pricing in Fed hikes and invasion. If we are at 3,800-ish, the risk is now to the upside. Yeah. Tom, what do you think about the SPY 2K? Ooh, the bubble theory. I'd agree that it's possible, but only if you end up seeing other factors. Like usually you see inversion in yield curve. So I'll be watching that very closely. You also tend to have a kind of, usually some kind of house bubble as well. And I'm not talking about just price. I'm talking about some type of credit issue there. And that spills into it. So I don't get it yet. Usually do have winner's curse. I would say that we have experienced a pretty big winner's curse in markets with the aggressive action. Winner's curse is like a concept of multiple 2 years kind of serious gains. It's not usual for it to go now. Most crashes occur in a slot that's a little bit further away. Okay, I'm talking about proper depression kind of bad things. So that'll be interesting, but yeah, I won't say it just yet. Mercia Dragon says, what about the amount of money sitting on the sideline with inflation over 7.5%? Where do you think it'll go? Well, I think it'll come back into the markets. I think the markets are just kind of floating and you will see money come back in. I'm not sure what SPY 2K exactly is, blocks, but I assume it's just SPY going to 2K. And a few people are now starting to get a little bit more bullish here. And Woody says, we will quickly accept Ukraine going back to Russian control. Yeah, I don't think anybody can do anything about it. I think it's just going to happen. And what if inflation is transitory, the word that's gone away now? Look, I think the inflation story is probably, clearly it's here, but the key really is more not so much whether inflation is so much transitory. It's where are we in the line of the overall inflation story? And have we seen a massive spike up? Yes. But the Fed have done a terrible job of getting inflation at 2% for years. We've just had this hideous inflation curve. So if you think about the long-term average, and I think it's important to bring up, we're not even at the average yet of where we should be. So when we put that in perspective, is it that bad? We're catching up with it. I've argued this for a while. Like my dad's a farmer, and from the farming perspective, you go and buy milk. Milk didn't go up for 2 decades. Like it was still cheap. It was ridiculously cheap. So I think when I consider inflation, I haven't seen milk go up, and these farmers they were getting absolutely destroyed price wise. Whomever still says inflation is transitory is a nutter. Well, even J-Power doesn't say that anymore. Hey, thank you very much, Green Thoughts. Appreciate it. Okay, let's move into Tesla because people are obviously freaking out about this. We're now at 716. So we saw the 700 in the before. We actually got into the 600s there in the pre-market. It's going to open around 716. It looks like here. We've got 25 minutes till the bell opens. And this is the key support. Like there's no doubt this is a very key level. The thing with Tesla is, again, if it does rip, and we kind of suspect there might be some rip here in the morning from the markets just to try to trap more people into this market itself, then Tesla might be the trade for you. If you want to pick up long-term investments, then a 700, you could do worse. I mean, obviously, I think the worst case scenario from how I see it with the S&P 500 and all of that is going to be around a 550 Tesla. This is a good zone. I mean, the 800 has been breached. It's the first initial buy we had over here. It failed many times around 945. We've been very vocal about. We're through the trend line. This is the next level. Makes some sense to look for structure here in the trade for the day. But if we get through 700, watch out below, Tesla fans, because I think it's 550 town. And that goes for the rest of the market as well. I think if the market falls through this 4,000 on the US 500, I mean, it's going to 3,800. If the NAS gets below 13,000, it might really struggle and move quite a lot lower. And we took a look at that thesis before. People are asking about cryptos coming into the market. Let's just quickly look at the cryptos. I don't think it's really a question of the cryptos so much. It's really just more, what is the market doing, the stock market? Everything, all eyes should basically just look. If you were only to look at a few charts, you would just look at this. That's all you really need to look at right now. Cut the crap. There's no need to look at other markets unless you're trading them in particular. This is the market that is showing you everything that you need to see. Now, I've included the DAX in it recently for obvious reasons. I've included a sector in it. I've included IWM. But if you want to cut through the crap and just say, look, I don't really want to be stressing out about every stock or anything like that, look at these. And if you see this coming into support and you believe it's buying off it, go back over to your favorite stock and trade that long. Because it's most like it's going to move with the market. This is all running crowds. And depending on the stock that you're picking, it's going to move faster or slower because of the nature of what that is. But these are the markets that are very important to watch now. You just got to cut through the nonsense and just get involved in the real markets. Bitcoin, it's not about Bitcoin. It's about what are assets doing like growth. If it is a risk-off market, Bitcoin is getting belted. And I suspect, though we have just hit the big support here, Bitcoin could be coming into 30,000. And if Bitcoin is unable to hold 30,000, and I'll get the chart tomorrow for the video because I'll find this guy's chart was pretty good. He was talking about time distances between kind of the 2018, that decline, and when it put pressure on the bottom and end up what happening. And it's kind of timing pretty well for this. So we'll talk about that in another session. But we have here the supports. It's important. It gets through here, obliteration time for Bitcoin. So it's critical. It's within a 4,000 or 5,000 price slot of, it's not about this coin. It's about what this does. And then, of course, everything's leading off Bitcoin. But what you'll notice is that Bitcoin's holding a 35,000. Ethereum's holding a 2,400. So not too bad. But look at the weakness in these side alts. I mean, these alts are just hideous. Matic, new low. DOT, horrible. Frankly, terrible. KSM Kasama. I had to actually dump my Kasama in the previous session. 2 sessions ago. I had to get rid of it. I was like, no, I'm not going to cop this loss right now. It's no point. I was actually holding it for a longer period, but there was just no point. I knew it was going to get obliterated because of the market. The market was showing us weakness. This thing's going to get obliterated. And every single rip rally that's happening on Bitcoin still keeps Bitcoin up, but these alts are just getting hammered. Absolutely disgusting. All right, let's go back over here to the futures market. 21 minutes off the open here. Read some chat while we wait for this. My Bitcoin average is 50K, says Christopher. Oof. But yeah, I can see why. Willoughby Nee says, how do I get a program like yours? This is just TradingView, man. You can just click the link in the description below. Just click on the link. By the way, if anyone wants to buy TradingView, the premium, click on my link, then buy it. Then I get 20% or something of your sweet money that you're paying them. Otherwise, you just give it all to them. Buy me a 7-Eleven coffee. Come on. But yeah, in all seriousness, this is TradingView. It's probably the best trading software from the technical analysis. And I'd actually suggest that in many ways, you don't necessarily need to execute through this software. You maybe have separated execution software and then use this more as a tool for your analysis. And it can also be good for taking snapshots. So you can publish your ideas, keep them private, and then keep like a bit of a logbook of what you're doing. But this is the most comprehensive technical analysis package out there. For anyone who doesn't know as well, obviously, if you want to see those volume profiles and things, you can put them in here. And then you can add volume profiles to your analysis as well. So let's say we're doing a volume profile here. If you need these types of things, whoops, and you don't fudge it up like I just did then, when you put it on the charts, that's the type of thing that you're doing. And basically with volume profiles, they're really just mostly showing you touches and areas of big transactions, etc. I don't like using them too much, but I will start to bring them on because a lot of people like them. I prefer just the old school price analysis, supply demand zones, creating kind of boxes and then working with the price in that area. So here we come into the market. We've got some form of base in the market structure on the futures. We've touched it twice now to the 13,000 basically. We've created the 1 hour long leg doji, which is good because it's on an hour. You see the bullish hammer here as well and no follow through. So far, is this an important zone? You would think it probably is. So let's now go into the 15-minute chart and have a look at it. It's a little 15-minute rejection and another little rejection coming through. This is 13,160. Just an interesting little area here. The support, the first maybe signs of some recovery, obviously 13.22, big level here. And if we breach through that, we're moving towards trying to fill the gap. And I have a suspicion that it'll kind of maybe not even just fill. It'll kind of get close to filling and then sell off. So you've got really two big scenarios here. You have the chance of a potential rip where the market recovers a little bit, sucks in people, and then around this level, you could be looking towards selling the rip. Just some chess plays here. Thoughts for the day. May not eventuate, but certainly a scenario. The last one is obviously the follow through to the short. And if that follow through happens, the algos will probably get involved in the market and quickly try to push to 12.8. So you've got three scenarios. And you might say, but Tom, that's like saying it's going up, down, all around. True. But what we're showing you is correct, is the key areas. Because if you are just trading randomly in here, you're probably making mostly a mistake almost all the time. If you're trading the ranges more, you're giving yourself a higher statistical advantage of being successful. No worries, Roxanne. Appreciate that. But at the moment here, I kind of still like this idea of the slight pickup. And as we approach this 15-minute close, check this out. So we're about 1 minute off the 1:15 a.m. my time, but obviously off the 9:15 a.m. ET. And we've got this double rejection candle. And as we saw before, the candle here, all of this level is very interesting because that 1 hour also has long leg dojied. It's a highly volatile day, so it may not be for you. I would probably go with stop losses and take profits to be set because markets are going to move fairly quickly. But yeah, interesting long leg doji, bullish, big zone, I feel. And then the second one, obviously that 13,220. Thank you also to the almost 1,100 people that are joining us here today. You guys have done well, considering I didn't even announce I was going to do an open stream. I appreciate your support. I guess it's because Meet Kevin doesn't do the streams anymore, yeah? If only I was in America. It'd be easy for me to do opens over there. Gary says, Tom, do we see confirmation of the Titanic formation? I know what you're talking about there. It's going to be this one here. I'll bring it on. That's the Titanic formation. What do you think, guys? By the way, if someone wants some comedy gold, go and check us out on Twitter. Oh, I was rolling on this one. What is this? Oh, I was going to reply. Must have forgotten. Check this one. It's so funny. Oh man. It is literally everything that happened. Let me get the share. Copy link. If anyone wants to watch that, pretty good. See what you think about that one. Derek 4 with $1,000,000 for Hong Kong $50. Hi again, Tom. Since you are here right now, I want to ask you for your views on TTD. Oh man, you're sticking with that one. I remember that from back in the day when you used to super chat me about it. TTD, the trade desk, and make a petition to keep these pre-market streams. Yeah, it's not possible, man. It ruins my life. I mean, you got to remember it's 1:30 a.m. It's not easy, unfortunately, to do them all the time. I can do them occasionally, but during these periods, just so early in the morning. When I used to do them last year, it was pretty brutal. All right, here, I like to do it when there's big days, like there's this kind of day. You know, you've got this volatility that's worthwhile coming in and having a look. Here we have resistances of the TTD, and it looks kind of similar to the others. You've kind of got these rejection candle formations, just like the rest of the market, which was all showing the bearish side. It's held up okay because of what it is. Obviously, an advertising, marketing, trade, the trade desk itself, the nature of its business is probably not doing poorly right now. I would expect it to stay choppy while the rest of the market stays volatile. And this actually, where is 68? 68, yeah, 68 is basically just this little bit of support here. It's going to open kind of on the support. I don't like the candle formation, man. If you want to go bullish on it, I feel like snapping that would be a massive deal. About $75, snapping that break and then following through here, having like two scale levels, like a 1/3, 2/3 kind of scale level. And by doing that, what you're doing is you're allowing the market to show you that it wants to go in that direction. I think that's very important here for it. Are you going to play the market open music? If I do, don't think I own the rights to the song. I need to go buy the rights to the song again. So we'll go back to, and Derek 4 with $1,000,000, Hong Kong $50. Sleepers for the week, Tom. Yeah, but I don't know. I need it. I'm getting on for doing those. Anyway, enough complaining. It is true. You don't want to hear whinges. Let's move through some of the things that are doing well. We've got Moderna moving up here. Lockheed Martin, we discussed that one before. Pre-market, only a few positives. Let's go through the negatives, though. We've got BKNG, Booking Holdings, down 9.1. EPAM, down 16.49. Coinbase, 7.75. Tesla recovering a fair bit here. Was down over, almost 8% before, now only 6.5%. Spotify, 6.23%. Twilio, a lot of the big names, Zscaler, Visa, huge stocks down a lot. You just keep scrolling through. It's all pretty bad. And if we scroll back over, let's have a look at the Apple, because we missed that one before. Apple's probably going to be a bit of a teller in terms of the way that it reacts with the market today. It's going to try to hold this 155 support. But if Apple fails here, it's really the last of the big tech stocks that hasn't shown significant weakness. Don't ask me how Apple's holding up so well. This stock's a tank. I don't get it. I even think the valuation is not that good. So it's coming in 3.73. I feel like it's got catch up to play. And if Apple does fall through, it could get brutalized a little bit. You know, this stock's down 3.75%. By the way, Intel making a good chip finally. Is anyone aware of that? Intel actually catching up to AMD and Apple on the silicon. Is it time for Intel to do better again? Maybe we'll talk about that in future streams when it's not so interesting to look at the market itself. But yes, this level, resistance, support, big zone, 50 weekly underneath it. I'm not sure if the 50 is even that heavily respected by Apple. A little bit over here. You can see those bounces that came off it. But in general, I think that 155, people are looking for that to hold for the session close. If it doesn't and ends up being bearish, could also be another signal towards further shorting coming through. Already below the 155, the close is the key there. The close is the key. Jeff says, Tom, where do you see Google price after the stock split, i.e. year's end? Yeah, so Google's an interesting one. So you probably want to bring the fundamentals a little bit into the Google discussion. So let's look up Alphabet here. All right, so let's look at the PE ratio because they do make actual money. So Google now trading 2596, trading at a 23.14 PE. I don't think it's trading at an unfair price, really. I mean, for me, if you could somehow pick this up into the old 19s and 17 PE ratios, which could happen, it kind of cheap. It's on a very nice trajectory here. Remember, it has a whole bunch of things in there, the strings in their bow. So it's moving down. I think you could get back to prices that are sitting at around this 28 to probably about 28 PE. So just work out 28 PE, and that's the kind of target that I would have on it, whatever that would equal at current earnings that we've just seen. Around 28 would be a good level here. Seems to be a fairly decent average, with the top end being around that 32. And I like to look at these charts because it helps you a lot. It's kind of like technical analysis. Yeah, what you're doing is if you're finding a stock that's still got great earnings, still doing great, and you're getting it at a good price, and then when you think it turns around, often stocks will get overheated. Now, don't consider this because obviously they're anomaly earnings. But when stocks get overheated, what sometimes they'll do is they'll go to the upper band of their PE ratio. And you might say, well, fundamentals don't matter, Tom. Well, they do now. Okay. They didn't 6 months ago, 12 months ago, 2 years ago, whatever, but they tend to now. So the top ratio can also be a good level for you to be looking for your take profit. So I'd go with around that 28 to 30 PE as my target for the end of the year on Google. People are asking, should they close their puts today? I think it'd be a good time to scale out of your puts. I can't give you, obviously you can practice your own thing, but scaling is a good educational concept, yeah? The reason why is look at the VIX. What is going to happen to your put today? It is going to skyrocket in value thanks to the fact that the VIX is sitting at 37, up 18.61%. It's going to make your put worth lots of money. And if the market, think about this, did this for a while and then went down, even if it went down, you'd be eroding time to a degree. And also, you may actually not have as high a VIX, even though the market's going down to the next level. So that's something that's really big here in when you think about, puts as well. The key is time, but also incredible VIX brings you some serious coin when you get rid of those types of things. So we're 7 minutes off the market open. We've seen some recovery in the futures market action. We're looking mostly at the NAS here today and the S&P. That's because these are the key ones. We've kind of got this little rejection candles coming through here early. Looking for a breach above this to be slightly bullish here into the session open, at least from the first kind of sign of something looking good. And then you're looking for that 13,220, something like that, breaching through. And the idea is, well, one of the scenarios we've talked about is a potential small rip here that then goes to try to fill the gap, if that is possible. And then we get that, of course, sell off in this zone. So I think there's multiple different opportunities. If you want to sell, tough to sell here. Kind of insane almost to sell here. Maybe you'll be correct. I don't know. Statistically, I feel like it's not a good level to sell. If you were selling the previous days, all good. But if you get the market pick up, then you might get the opportunity to sell the rip. That would be pretty nice. You might have a little smiley face. Be pretty happy with that. Or obviously the fall through of the lows, triggering algorithms into the short. And right now we're at a little precipice of the bulls and the bears having a little fight pre-market here. What are the chances that the session stops like we saw at the beginning of the pandemic? Very low. It is hard to hit triggers. I still cannot believe how many triggers we were hitting during the pandemic. The chance of it happening involves some kind of movement by Russia that then gets extreme, and somebody mentioned some crazy words, which you can imagine what they'd be, and then you'll get your trigger. Chris Mayberry says downside is the trend, don't find the trend. Well, that's right. But your scenario is, do you want to short here as well, Chris? I agree. Follow the trend is the easiest trade. Trying to pick this up today is a tough trade. It's more of a scalp, and it requires an entry, a stop loss, and a take profit, obviously. The bigger option is really to try to, go with the trend, but get a better price. So that's one of the ones, just a scenario that you often do see occurring. Right now, you would say that the market is triggering towards the short, and you're looking towards trying to see that buy through. Tesla crashing again. Well, you can see it here with the NAS. So we'll go into a 6 screener. Let's bring up some of the ones that we're going to be watching here in the market. I will bring up the US 500 here. We'll get rid of Ethereum for now. We'll watch Apple into the open. Obviously, this is the Russian exchange. If anyone's not aware, they blocked short selling here. That market now down over 60%. Imagine that short. Whew, probably a pretty easy one too to target in. Now that's the short of the day. The short of the day was there. Though who knows, you might not even be able to get your money out of it because they closed the contract. That was a little bit dodge. All right, so we'll watch Tesla. I think we'll watch Nvidia on the open as well because that's sitting around that 208. We do have a heavy support around 200 for the old Nvidia. That's going to be the previous supports. So if you actually draw a trend line through these, I don't have it on this chart, but if you draw a trend line through these, it prices up with about $200, and the previous resistance is a support zone. So Nvidia coming into an interesting area straight away here today. What else? We've got Apple. We'll get rid of the MOEX, and we'll put on, I think we'll put on gold. Actually, I'll let the chat decide. Chat, what do you want on the left hand down here? Putin probably hedged the whole country. Yeah, he shorted the MOEX. Can people outside the US trade all stocks? Yeah, I don't see why you wouldn't be able to. I mean, I have access to a lot of things. Many brokers give you access to plenty of opportunities out there. All right, here we go. People are voting what they would like. We've got Barber still coming in. We've got gold. We've got gold, silver, GME. My God. No. Silver, XLF, oil, Google, gold, Tesla, gold, GDX. I think gold wins. Okay. Well, we'll use gold. We'll get on the old 5-minute for gold because that's where the most interesting thing is. We'll stay on the 5-minute here for the US 100. Tesla opening on the support. You got that 700 support that's opening up here. US 500 coming right back down. So the short starting off here in the markets. You'll see the NAS down 3% now, back to 13,082. That is a little nasty here on the US 500. So going short here initially in the market open in terms of the futures. Lots of up, down, and all around action. Look at them all. Wick Fest Palooza. Tough day to trade. Some people may not like to. It's not a normal, nice technical day. It's a aggressive movement with plenty of potential traps. Pre-market here for Apple, really bad. Wow, look at that, 4.65%. Okay, here we go. Ding, ding, ding. We're opened up. So we open up at 3.14%. Let's bring up the actual spread of stocks and see how we ended up percentage changing. So what's the worst for today so far in terms of the big caps? We'll go here, 16% down EPAM. Tesla, it's like off to the races here. Down 8%, testing the 700 immediately. Got Coinbase also down 8%. Everything is kind of opened on those low points. Where's that Nvidia gone? Twilio 6, Spotify, interesting. Tesla still holding, instantly up $10 on the buy. So the US 500 actually moving down. Tesla finding instant buyers on 700. Stock that's moved the bullish side. US Nasdaq actually picking up, but S&P still weakening. So that's interesting there. Nvidia opens to some buy pressure. Bit of buy the dip here in terms of initial reaction from the markets. Got the US 100. Let's just go back to the 15-minute chart just so you can see those rejection candles that were coming through on the futures market there. I think that's something that's important to look at. So Tesla leads at $11. Most other things still just kind of hovering. Apple's sick though. That was gross. 4.6% down on Apple leading in. Ugh. Not normal. 4.6%. That's the first day we've seen true weakness coming out of Apple here from the start. I know it's sold off other days. Like you look at the percentage here and you might say, but Tom, look at this. It's sold off 3 point. Yeah, but that's 3 points. This is 4. Apple down 4.61. Amazon down 2.7. Google only down 1.6, showing that the market wants to hold certain stocks. See, I want Microsoft down at 220. Give me 220. It's not that hard, Microsoft. I want to buy you and I want to own a lot of you. Okay, a lot of the Microsoft. Okay, here we go. We're testing. There we go. Some buying. This is the buy the dip. The retail traders, they're slobbering everywhere. They're getting very excited about buying up this dip. Gold down 1950. So gold actually weakening here as we see this rally coming through the initial market buys. 2.25 down for the US 100. Previous gap close for Tesla, not the after hours trade. I believe that went to 750. 760 for Tesla is the gap close here. So Tesla still, as a percentage, looking pretty good. So our suspicions so far early anyway, coming true with the buy the dip philosophy coming in. We had a 75% bearish poll. We'll end the poll now. 76% bearish, 24% bullish. So you guys might have got it wrong here initially, but I don't think you'll probably be wrong after a few sessions. Let's now take, I mean, this is definitely buying, All right, so we're coming up on the resistance of 13,220. We just breached that 13,15, which is going to be a scalp area that we were discussing before the screen. Gold moving down heavily now, 19.45. So as we suspected, fairly volatile. We've already taken a 1% uptick here early in the session for the NAS. 13.2 getting tested, 13.220. Little scalper would have been here going, woo! I like that, taking that little cheese in that area there. This is a tough zone here for the NAS. The next big zone around this area. Closure is key above this zone, okay? I don't want to see a wick up there. I want to see closure above there. Tesla hit resistance, sold off. So what's holding the NAS up? Scroll through. Google only down 0.8%. Wow, that's a tank. Nvidia buying fairly strong. Up a few bucks. Tesla should suffer fairly hard because it was recovering. So even though it's probably going to move up, the sentiment here is shifting towards the negative. I've seen people on Twitter that supposedly are Tesla hodlers for life saying, I'm going to sell it all and buy it back cheaper. I mean, wouldn't you be just dollar cost averaging in your concept? Enphase is awesome. Enphase down 4.31%. Enphase is a wild stock. Gold 1945. So Enphase. Get rid of Nvidia for a second here. So the key for the buyers is really going to be around the gap fill. So once these stocks move the gap fill, if that does end up occurring, what happens then? Is that where we see bearish pressure? And remember, NAS currently not through this zone, and S&P 500 certainly not through the war yet, in terms of the bulls and the bears anyway. We hit the res, struggling a little bit. Let's now go to the 5-minute chart, have a look at the closures on this. So the first closure, 5 minutes is in. It's only been 5 minutes of market action. We hit the res. Now we want to break it so that we can move forward with this buy the dip scenario. Then, hopefully, later on, you get the gap close trade. Just quickly reading some of the chat here. What's the level you're looking for to short the Nasdaq? Well, you're looking between that 13.4, 13.5 zone, like we've got it highlighted up here. If it does end up getting there, that's a gap fill. Obviously, 13.5 previous support, previous close. So this is a zone that you're looking for turnaround stories. It's not so much that you just go and short a zone or buy a zone. It's understanding the dynamics of the closure or the movement in that supply demand area. Yeah. So buying the dip still working out here on the session. Apple's still quite sick, catching up to the rest of the other stocks. I don't like the Apple. Okay. I know the Apple is strong. I know you all love the Apple. I don't like the Apple. I'll tell you what, it's almost compelling when you think about it, that Google price, isn't it, with those previous earnings. So here comes the Nasdaq trying to test a 5-minute closure above that area. It's got 3 minutes to close on it, so it hasn't happened yet. Gold continues to get pummeled, 1943. What's happening with oil? Oil sitting at 98.75. So let's move off gold for a second here. Go to US oil. US oil, very volatile trade. $100 target hit and then moved back. So the current thesis of the bull run in the early morning session is there, but it may be short-lived. I mean, I could see this. Let's see if Shogun's around. Are you around, Shogun? What's your thoughts on how long this lasts for? Like, obviously, I know you're thinking 13.4, 13.5 as well as a potential area gap fill it, but it could be over fairly soon. Kevin says, don't be dissing Apple, Tom. I'll ban you. Luckily, that can't happen. And Corey says, the apple is poisonous. The apple is expensive for one of these stocks, and it hasn't moved down. The sentiment's been so strong on it. And Ulrich's going with that as well. Very cool. Thank you to the 1,200, 1,300 people joining us in the open. Obviously, a volatile session. I don't think it's going to be, over quickly. We are seeing rally here in the morning. We talked about the bearish thesis. Obviously, the market has had time to digest what's going on. The structure was starting to form. We saw it here. Currently still looking towards this bullish movement, but we've got problems around this 13,360, I would say 13.4, 13.5 zone really. But just remember, rallies into the gap fill. We're getting close on some stocks. Look at end phase. It's powering up. Look at it go. Elizabeth Shoe, $4.99. Tom, so happy to see you live. Thank you, Elizabeth. With all of these crashes, what are the good signs to look for entry opportunities or to average down, educationally speaking? Well, today was probably an interesting level from a first pickup of portfolio level, yeah? If you hadn't already, which I'm sure some people had. We moved 1,000 points down the NAS. We hit a 13,000. We hit close to the 4,000 level on the US 500, which is always going to be your first thing. You usually want to do it like in a rule of thirds. So say your thesis is 3,800 on the S&P, then you might want to grab some in that 4,1 to 4,000 range. You would probably then grab the predominant amount at your level, but you do want to start picking it up. And you probably would have bought some just the other day. So you're not going to get the best price on everything, but no one really does. You have the opportunity as well then to look for the turnaround story, which is obviously going to be the base formation, double bottoms, lightning bolts, those kind of things. Entry opportunities, I think some of the big key signs are going to be, look at this US two-year, 1.48 down 7. I think some of the big signs are going to be things like the 2-year continuing to drop, the narrative of this whole Russia thing, I think will play out. the Russia-Ukraine thing anyway. We talked about it before, but I still have bearish sentiment on the markets for now. It's hard not to. I might be bullish here in the session open, but I was only bullish because it just made sense for people to buy up initially. Just had to do something then. Thank you very much for the donation. Appreciate that. Someone says, wow, check silver. I assume it got flogged to the downside. Yeah. Okay. There you go. Silver much worse than gold, but gold still got flogged up. It hits this resistance, 25.30, just couldn't breach it with the proper close. All right. So we get any gap fills on any of these stocks? End phase, obviously not quite yet. Tesla 724, 750 being the gap fill. $4,100 gap close, someone said here. Ulrich says, look to long pullbacks in commodities. So it's pretty brutal pullbacks here. They're actually going all the way down 24.50. Silver's been the weakest, like, as in it hasn't been moving with gold. It's a huge turnaround, though, for it. I mean, how much is that as a percentage of the downside? The silver trade just dropped 3.26%. That's irrational. Gold dropped decent. Obviously, the 1960 zone, I did expect some problems there. But I think that there is a case here for what Ulrich's saying as well. Like, you know, basically look towards those longs. I mean, you can see here the market coming back down, testing this zone. This will be an interesting test for it. It's closed a 5-minute above. Let's have a look at the 15-minute here. Okay, so no 15-minute above. 2 minutes till this closes. Big deal. This is the fight between the bulls and the bears that's going on here. Wow, check this out. So Labu, if you ever look at it, which is the 3X biotech bull ETF, trading at $13. Whoo, that's some bad action. $13. So that ETF has a chance of really kind of busting if the market went too much lower. Eli says, great day for scalpers. Yeah, good session start for scalpers. This is still a big fight zone here on the US 100. You'll notice I'm focusing on this market because it tends to have that. It's got the overreaction on it more than the other market. And the S&P 500 you think I'd be watching, but this doesn't excite me as much as this does from a price action standpoint. It's all about being able to read those markets and go through them. Eric Jarbo, $2. Appreciate you staying up with us, Tom. No worries, guys. Look, I know it's a stressful time. This sucks, you know, for many people. And you need some kind of clarity. I've at least seen enough of these times, not always the same thing, but I've gone through some pretty big lows. I still think I would have loved to have streamed 2020. That was, even for me, just wild. 2020 was insane. Gary Saini, that was the craziest market I've ever seen. With the, like, anyone that experienced 2020, did you let us know? Chat, did you experience the 2020 hits and all of those things that were going on? Gary Saini, $10. Thank you for everything. No worries, Gary, man. Appreciate it. Finn McCool says, great commentary, Tom. Nice to get back into the mind of a pro during such times. Yeah, I mean, you can learn this stuff. It's just that there's the 15-minute close. So actually got above, which is good because you didn't really want it to be a false break to the upside. I mean, obviously it could be, but I think the thing there is if the 15-minute had fully rejected, oh man, that would have been bad, like really bad. It would have got bearish immediately and got very poorly. So we're still looking for trying to get these gap closes. Some stocks are getting close, which I think is important to look at because look at this. Look at the end phase. So close now. Oh my goodness, it's close. The Tesla, 735, 760, kind of the zone. Just touch and go here. 2020 was nuts. Even the incredible rebound was shocking. The whole thing was insane. But those limit downs, like I remember watching Bloomberg in the mornings, and obviously, it was a punishing period, more so than this one. I feel it was a punishing period because you got bricked no matter what sector you were in for at least the first couple of weeks. And I honestly did not think that this market would be saved the way it was. If you'd told me, oh yeah, the Fed will come in and then all of a sudden you'll just see this mass uptick, just never would have thought that was going to be so strong. William says, I couldn't believe how many times the circuit breakers flipped in 2020. It was wild. Yeah, the circuit breakers were crazy. And Chupa says, made money in 2020, so it wasn't bad. Yeah, actually, a lot of retail traders did incredibly well in it. But a lot of big pros did poorer than retail. Retail smashed them. I think this is the market attacking retail and saying, you know what, you guys all thought you were so good, but we show you what's going on. JR Hicksonbale, $2. Love the 2% smash on silver in less than 15 minutes. Yeah, it was pretty brutal. Silver's such a manipulated metal. I'm seriously considering not actually trading silver anymore. I'd trade gold, but I like to trade it actually as the miners most of the time. Apple now going back up above this close here. It is in terms of the support. Let's have a look at the GDX. So GDX came down because of that initial move. It was looking actually a lot better. Pre-market was up about 4 and a bit percent. But I actually do prefer to go with the stocks over the commodity sometimes. And silver, I just can't touch it. It's so ridiculous. Silver clearly has so many shorts on it and is so manipulated to the downside. It's disgusting. Here's Tesla, 740. Be careful soon, guys. Coming into the gap fills on a lot of these stocks. Look at this. If you are a buyer, this is a zone of issues. Silver and gold running, turning around. 1937, holding anyway. Let's bring up the sectors for the day. Have a look at which sectors are performing well, which sectors are performing poorly. I'd guess it's probably semis doing all right here in the session. In terms of movement up. Yep, jets as expected. That had to be, I probably should have warned that. Should have put a cut on it yesterday for everybody. So this is the session so far and what's happened here in terms of the market open. So we have semiconductors. You can see they're kind of floating up. Got GDX just holding a slight gain. It's only still early days, but in general, most things kind of slightly upticking here in the session open. Go back over to the screen, see how we're going with those gap fills. All right, here we go. We're continuing the bullish strength here. Nasdaq issue around 13. I think that these stocks are going to start gap filling before the Nasdaq gets up. S&P 500 dealing with the resistance now. Definitely the market you didn't want to be in here early. This one sucked in comparison to this one or this one. Gap fill complete on end phase. Tesla moving now towards gap fill, 750, 760. US 100 continues, big pump. Pretty eventful 20 minutes here. I know I'm just quiet because I'm looking at this market and we're just assessing it as we go. End phase is complete with the gap fill. Let's just do the quick message in terms of how much movement that is. That's a 7% movement in 20 minutes. Wow. Eli says, boom ease. Oh, nice. Matt says smart shorts holding yesterday are scaling out. I tend to agree. You will see scaling of shorts and take profits here in the open, which is forcing also this bullish move. I think also when we did the poll before and you had 75% bullish or 76% bearish, sentiment, that really does point towards this being a more logical conclusion, unfortunately. Gary Sony says poor buyers are going to get smoked. Depends on what they're doing with it, aren't they? There is an argument that silver is low on purpose for industrial uses. There is certainly a very good case there. So we've had some stocks close the gaps. Let's now go through some of those. You can start to see them here. CRM, net, some of my favorite sectors, the old cybersecurities closing up, TDOC closing up. Crazy. Palantir holding now for 2 days straight, that one. Palantir's on its knees. $10 has got to be value for it. And poor Kathy Woods is selling it hard. 750 reach for Tesla. I wouldn't blame people for taking off the order there because it's around, like it's a $50 target. But gap fill technically still is 760. Remember, NAS is not currently there yet. So a lot of stocks are still behind. And on the right-hand side here, which is predominantly technology, you can see how many have not done it. What today is showing you is that the latent demand for certain stocks. All right. So what that means is that see how we've got good earnings for Enphase and it was up really hard. The good stocks are coming back much harder. So what this is showing you is that when that turnaround happens, these are the types of stocks that if you're wanting to pick up, and let's say you think the market's coming back down, these are the ones that the market is most bullish on. Remember, it's better to buy a great company at a good price than a piece of crap at a bad price or a good price, great price, whatever you want to call it. I'm going to call it piece of crap. Enphase, flat. Google, flat. Some of the favorite picks of the people in the markets right now. Microsoft, flat. Apple, question mark. Square, question mark. CRM already gone bullish. All of these stocks notoriously have bounced hard when that whole rip happened. Like think about net. It ripped up super hard from the 24th. In fact, it hasn't even gone back to a new low. So that's where that strength is. NAS now 13,341. Crowd CRM up. That's right. Not bad stocks. CRM is unfairly bashed. US 500 putting pressure on the resistance, 4160. Here comes Tesla, 752. Look at these negative articles. US stocks tumbled. It's like one of my videos. Everything's a crash. Yeah. But that you have to do it on YouTube. I'm sorry. If I'm not going to put my face with my mouth wide open, you've got to use some provocative statements. Opening of trading, S&P 500 Dow falling 2%, Nasdaq 100 entering bear market. Technically, yes. All right, let's go over the Webull here in terms of percentage changes. Thank you very much as well to the 1,200 people joining us. So we've got some nice action coming through here. A few stocks. Moderna, incredibly strong on the open, up 7%. Biotech, actually, look at this. Interesting. Let me go have a quick look at the old biotech action. So yeah, you can see CRISPR, Beam, all of those not down so much. Let's go over to ARCG for a second here. Now look at that, little bit of buying. Let's go over to the Labu. Yep, again, trying to go bullish. Very oversold sector here. With rates coming down, technically is better for bio. Well, that was sneaky. So is that all we just saw? Is that where we start to now see the sell-off? I know we're not quite on it for the market, but we did hit that little bit of support here. The only reason I say that level is because all of a sudden you got close to gap filling on so many stocks and you did gap fill on a few. So I could see it here. There we go. Kevin says CRM just hit the 200 week, might be a dice roll around here. There we go. Oh, yeah, you mean 200 weekly. I get it. I get it where it was in the support. Cody sad didn't get it 690. I assume he's talking about Tesla. Tesla having trouble with 750. Yeah. All right. This is literally where if I was longing in the morning and I was looking at scalps, let's say, which may have, I'm starting to look at this and go, okay, well, let's check out this right-hand side story. We're at a resistance. We are forming base, but this is where the bulls and the bears fight it out. We've done an okay job of filling some nice gaps early, but the fear is suddenly dissipating. We've spent half an hour getting lots of retail money in, closing off shorts, doing this, covers, whatever. What is the next step for the market? See, look how critical this is for the S&P. I'll stay around for this 5-minute close here in the 15-minute. TG says, I'm going to short Tesla hard. Lichtstock, $5. Thank you very much. A bank stocks like JP Morgan, a good hedge going forward. Thanks. So JP Morgan, obviously, if you think inflation is the play, then they can be a decent kind of move. I'm not a huge fan of banks, all right, as a sector. And my main problem with them, and this is where I'll agree with Kathy Wood, is these banks are notoriously hideous in terms of the way that they present their business over the long term. Still be careful here, guys. This is around that zone. So the reason is they haven't really reinvested in their business for a long time. And I hate that from an investment standpoint, because you're basically talking about holding them as a hedge. They don't invest in their business. They tend to do buybacks to pay themselves and give themselves little pats on the back and how great they are. And I just feel like there is disruption that's forcing itself through this financial sector. So I'm not a huge fan of it. It also is the first sector that if really the economy goes bad, this is the canary. This is where you get absolutely belted, because what takes the brunt of a bad market, a really bad market, it's always going to be the finance. So I'm not a huge fan of that one. I would say materials is the better hedge, and it's already running, but materials is the better hedge. Thank you very much for the donation. Kevin says banks always win. Yeah, they do, but they still get belted on stock price for some time. Chad probably brings up a good point. I'd rather buy Berkshire than JPM. I agree. He loves Jets. No, I don't love Jets. Today is a bad day for Jets anyway. And that's the importance of scaling. If you actually look at Jets on the chart, you still had that trend line that was belting it round. All right, so it's a pretty interesting morning. We're at the resistances. The old NAS is trying its best. Tesla's kind of floating all around. You start to scroll down. There's a bit of greens coming through now in the market. Lots of greens. PLTR actually up 3. We're getting close, though, to some key points. Look at that NAS. Obviously, continue to look at this. 1 minute till we get the close here on the S&P. Going to look over here. What's the price action telling us? Let's go to the 1 hour. Okay, 1 hour's not doing much for us. Let's go to the 15-minute. All right, close happens at resistance. Sell off by another sell off. That won't be good for it underneath there. Resistance, yeah. Buys through. Could see further rally. That will get you into that zone. So, yeah, some interesting stuff. All right, guys, look, I'm going to have to leave you. It's 2 a.m. here in Australia. Thank you so much for joining us. We appreciate, obviously, always your support. It's been an interesting day. We certainly got it right in terms of the initial reaction here this morning, which is a buy the current dip. But we think that this is a very important zone. We've seen some gap fills on some nice stocks. Lots of things went green. It's where you start now saying, okay, well, is there a sell-off signal for me? And that's going to come down to your system a little bit on what you want to be doing. It's tough. It's definitely highly volatile, which is exciting at the same time. And you should always remember these kind of days. And it's not so much about the bad news, but it's more that this is the type of volatility that, you remember. I remember all of these kind of days. I remember the crypto crashes of when I was streaming last year. I remember the crypto crash of 17 into 18 and all of that. You end up knowing all the stock market crashes. I know the Euro Swiss, go have a look at that, about to make a new low here. Yeah, it's an exciting time in the markets, and certainly one that you've got to navigate through with logic, calmness, and being like a psycho robot, really. Because if you go into this and you're charged and you basically have some kind of perception about what's going to happen, you're not following the price action and the general sentiment and your general concept, you can get obliterated. I'm sure a few of you accidentally have. So thanks so much for joining us. If you enjoyed the stream, please remember to subscribe, smash that like button for helping us out. And I will see you tomorrow for the daily video recap. And I hope everyone has a great weekend as well after that. But yeah, today, be careful out there because there's a lot of great rally here. But as we can see, things are starting to turn a little bit to the downside. This is also probably important to leave. Mountain Fortress says Biden to make address on Ukraine at 12:30. Well, there's a little catalyst for a direction as well. What's he going to say? Something crazy? That wouldn't be good. All right. See everybody. Good luck. Bye for now.